So I would like to dedicate this video to my YouTube subscriber. His name is Dr. Chaitanya Kumar. He sent me an email. I think this came to me yesterday or day before yesterday. And as usual, quick disclaimer, I am a SEBI registered research analyst. All my videos are for educational purposes. No buy sell recommendations, no investment advice, no research reports. Please do your own due diligence. Coming to the email that my subscriber has sent, have a look at this email. Before even I read the email, I request all of you, whenever you send me an email, please start the email with Hi Rohit or Dear Rohit or whatever. End the email with, regards, warm regards, best regards. Write your name properly. Write and tell me where are you writing the email from, because I have students from West Bengal, I have students from Haryana, I have students from Bangalore, I have a lot of students from Hyderabad. So if you write your location, it will be great. I will at least know where you are writing to me from. Moreover, copy paste the email to ChatGPT and please request ChatGPT to properly format the email. No spelling mistake, no grammatical mistake. When you send an email to someone, you are sending your impression to that person. Look at this email. There is no formatting in this email. Okay. I love my YouTube subscribers, but I don't really love the kind of emails that they send me. Okay. I'm not impressed by emails. But forget about all of that. Let us focus on the content of the email. That is very important. Every question needs to be answered, even if it's a beginner level question, intermediate level question, or advanced level question. My role as a teacher is to answer the question. Good morning, sir. I am Dr. N. Chaitanya. I was going through Kalyani caste tech chart. So here I am going to talk about a chart or a stock in this email. So that's why I gave you the disclaimer. Don't consider as buy sell recommendation. The pivots were changing in weekly and daily time frames. How can we approach this scenario, sir? Thank you. Pivots are changing. I don't understand the question. Maybe he wants to ask, there are different pivot points on daily and weekly. So how to approach that? So let's first look at the stock. Let me close this. Okay, let's go to Market Smith. He's talking about Kalyani Castek. Kalyani Cast. See, the first thing you notice when you write this is a BSE stock. Okay. So there are two stock exchanges in India, BSE, NSE. A stock that is only trading on BSE and not on NSE, I outright reject the stock because of liquidity reasons. Any stock that I buy has to be trading on the national stock exchange because of liquidity and turnover and volume. NSE has more turnover and volume. So outright reject. Before even I open the stock, it's a reject. Okay, I don't even need to look at the technical, fundamental, market, liquidity, comparative. But just for his sake, to answer the question, let us open the chart. So this is what it looks like. So this is the daily time frame chart. Let's open it on daily. So I will write here Kalyani cast. So this is Kalyani Castek. See, notice here it is on BSE only. It is not available on NSE. If a stock is available on both BSE and NSE, you see that stock on both the, you will see two names written here, NSE and BSE. So this is listed only on BSE, not on NSE. So liquidity issues, stock rejected. Okay, now have a look at this blue, green, red. The moving averages are in place. The stock is in a confirmed stage 2 uptrend. Looks like it has already broken out of the base. So there is really no trade here. Okay. He was talking about pivot. So here the pivot is, you see this box that opens here. I click here. Okay. Yeah. 573.95. So 573.95 maybe here. Yeah. The high of this candle is 573.95. So this is the daily pivot on the daily time frame chart. This one. And what about weekly? Weekly, if I click here, yeah, see the pivot is 637.90. It is stage number 1, which means base 1. So on the weekly time frame chart, let's go to weekly. Kalyani cast. So on the weekly, the high of this candle, 637.90, is considered to be the pivot point. Okay, so the question is, on the daily, it is this 573.95. So the question is, how do you, this is the daily time frame pivot point, and this is the weekly time frame pivot point. The question is, how do you navigate this situation where the pivot points on the two time frames are different? Well, this has already been discussed by me in the positional trading stock series. I have already told you that whenever you find a stock which meets the criteria for being a positional trade, like it's a fundamentally strong stock, the first preference would be daily time frame chart. So I would first try to buy that stock here, okay, at on the daily time frame chart, because it's a stock that qualifies as a candidate for a positional trade. I'm not saying this stock, I am saying any stock that meets at least 7 out of 12 of our fundamental criteria. That's a stock which is a candidate for a positional trade. So my first preference will be to buy inside the base. So first I will go to the daily time frame chart. Now on the daily time frame chart, if I get a breakout, proper breakout, I would end up buying the stock. I may not buy full position. Let's say I want to buy 100 shares. I might buy 50 shares here, or I might not even buy anything. So for example, if I draw this, you see very deep base, very risky base. There is no green zone closing after point number 2 inside the base. So this is a very risky base. So now you see there are 4 points completed inside the base. 1, 2, 3, 4. So now this point, that could become a buy point. So now you have 3 green zone closings inside the base. So now you could consider it here, but I would never consider it here because it's a deep base. There are green zone closing, plus I haven't even checked the fundamentals. If you go here, click on consolidated, see there's hardly any data here. There's nothing to check here. So it's a reject. I mean, I'm not even going to look at the stock because the stock is not traded on the national stock exchange. That's my reason for rejection. But assuming everything was in my favor, the answer to the question will be first get the stock on, start buying the stock on the daily time frame. If you want to buy 100 shares, maybe buy 25 shares on the daily time frame. And then when it reaches here, by that time you can start making your next few purchases. Maybe buy half position in on the daily, half position on the weekly, so that you gradually increase your risk as the stock moves in your favor. You are not putting in everything in one go. Okay. So good question. The pivots are different on weekly and the daily time frame. So how to approach this? The answer is very simple. Always try to buy the stock on the daily time frame chart first because you get an early entry. Or I will put it simply, on the daily time frame, you end up buying the stock inside the base. On the weekly time frame, you end up buying the stock slightly outside the base in most cases, because in most cases the high of the base is the weekly pivot. In Patterns like cup with handle, double bottom, you might get the pivot point of the weekly chart inside the base. But in most cases, like flat base, you know, you get the high of the base is the pivot point. So you could take an early entry into the stock if you understand how to navigate the daily time frame chart better. Thank you so much.